Hey guys, what's up? Welcome back to another video. In this video, I'm going to be talking about a stock that recently announced earnings for the fourth quarter of 2022, and that is Adobe. And we can see over the last year, Adobe is down around 25%. In the same time period, the S&P 500 is down around 9%. And over the 5-year chart, they are doing a lot better than the S&P 500, up around 100%, while the rest of the market is up only like 50%. So in this video, I'm just going to figure out the intrinsic value per share for Adobe. And then I'm also going to look at their financial statements. And I added something new to the end of the video that I think is going to start adding a lot more value to these videos and also to the channel. So stay tuned for that and let's get right into it. So we can see right here in this article that they point out that investors over the last 5 years have returned around 71%, or as we can see from this chart, around 96%. And if I scroll down here, they point out that Adobe's earnings per share growth has actually grown at around 24% compounded annually, which is a lot higher than their average 11% annual increase in their share price. So their EPS is actually growing even faster than their stock prices over the last 5 years. And so right here, they lastly touch on the fact that although the stock is down around 40% over the last year or so, which is a lot worse than the rest of the market, it could mean that the stock is oversold and it could be an opportunity to buy into the stock based on the underlying fundamentals for the company, which we're going to look at right now. And so right here, we can see this is their income statement for the 3 months ended December 2022 compared to 2021. And during that time period, total revenue is up from $4.1 billion to $4.5 billion. So that's around a 10% increase year over year. We can also see that in terms of net income, net profit is down from $1.2 billion to around $1.18 billion. So there is a slight decrease there in net earnings. We can also see this is their balance sheet comparing the year-over-year results. Total assets have pretty much stayed the same at around $27 billion. Total liabilities are up by a little under $1 billion from 12.4 to 3.1 billion. And then we can see in terms of total stockholders' equity, the retained earnings line item has increased from $23 billion to $28 billion. And we can also see that their total stockholders' equity has actually decreased from $14.7 to $14 billion. And that's mainly as a result of this increased treasury stock account from 17 billion to 23 billion. So that basically means that they are repurchasing a ton of common stock at the moment, just trying to return value back to shareholders. And so this is the cash flow statement comparing the year-over-year results for the fourth quarter. We can see operating cash flow is up from $2 billion to $2.3 billion. And right here, we can see from their balance sheet, obviously treasury stock account was increasing. In their financing activities, they've been repurchasing around almost $2 billion worth of common stock, up from $1 billion in the fourth quarter of 2021. So definitely a ton of value returned to shareholders, which is definitely a good sign. And so now we can see the discounted cash flow model, figuring out the intrinsic value per share for Adobe. Yahoo Finance, as of today, is estimating that they're going to grow at around 14% year over year for the first 5 years from today. And we can also see that free cash flow for 2021 was $6.8 billion. They have a net cash position on their balance sheet of around $1.4 billion and around 464 million shares outstanding. That puts their intrinsic value per share at around $270 per share, which means that at the moment they are trading way above their projected intrinsic value per share. So based on these growth rates, they are not currently presenting a good buying opportunity from an intrinsic value standpoint. And so right on the right-hand side here, I compared them to some of their competitors, IBM and Oracle. We can see that in comparison, Adobe has a higher gross profit margin, net profit margin, and return on assets. They have a middling of the pack PE ratio, and they don't pay a dividend in contrary to Oracle and IBM, which do especially IBM, which pays a pretty high dividend of around $6.55 per share. So from a competitor analysis perspective in this industry, it looks like Adobe would be the buy because they have way better net profit margins, or profit margins in general, and they're also trading at a pretty good PE ratio relative to their two competitors here. So from a competitor analysis perspective, I would pick Adobe, and then from an intrinsic value standpoint, it looks like they're not currently trading below intrinsic value per share based on these growth rates. But as I touched on at the start of the video, I added something new to the end of these videos to try to add more value to this channel. And so starting from today, I'm going to start comparing the companies that I've talked about in past videos against one another based on their intrinsic value per share, their projected growth rate, their profitability margins, and then also their stock performance over the last 5 years. And I chose 5 years because if I was doing it based on 1 year, obviously the stock market fluctuates a lot. So I'll try to update this every time I make a video, but it's definitely a lot easier to update it over the 5-year chart than the 1-year chart. And so as of today, obviously, since I'm starting off, Adobe is currently the only stock on our list. But basically how this works is the share price compared to intrinsic value for Adobe right now is 137%. And what that means is that currently the share price for Adobe is $370 per share. So it's basically trading at around 1.37 times intrinsic value per share. If you multiply 270 by 1.37, you would get the current share price of $370 per share. So basically for this list right here, when we're comparing companies against each other, we want this number to be as low as possible, because the lower it is, it means that the company is trading lower and lower below their intrinsic value per share. Obviously growth rate, I'm getting that straight from the discounted cash flow model. And then in terms of gross profitability and net profitability margins, we can see Adobe is definitely setting a pretty high bar here at 89% for gross profit and 27% for net profit. And obviously if I'm comparing companies against each other that are from different industries, the profit margins are going to be way different. So it's obviously not an industry analysis. That analysis I'm saving for this one right here to compare them against each other in the same industry. But this one does help us get a better bird's eye view of all of the companies I've covered in each of these videos to know which one we would prefer to invest in from a value investing perspective. And then lastly, we can see in terms of stock performance, Adobe is up around 100% over the last year, definitely setting a pretty high bar for all of the companies to come. So stay tuned, watch all of the videos, and I'm going to be adding to this list. I think I'm going to do a top 10 for each of these different tables, and then we're just going to continue to update it from this video onward. And so I'm not sure what to think of Adobe right now. Let me know in the comment section down below what you guys think of this stock. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.